Good Friday afternoon. It is January 8th, 2021. This is Guy McPherson of GuyMcPherson.com, otherwise known as Nature Bats Last. I'm going to present a few headlines since we gave one of these market reports on Monday morning, shortly after the open. That would be Monday, the 4th of January. So, among those headlines from Monday, COVID-19 vaccines are in high demand, but thousands more workers are needed to make them. This according to the Wall Street Journal. So, of course, vaccines are in high demand, the doses themselves, but we need thousands more workers to make them. What about all those unemployed people who got laid off over the course of the last decade or so? Don't you suppose we could hire some of them? I'm sure that they're willing. I know a lot of people personally who haven't made any money for a long time, and they would do that work. Very interesting, the difference between the so-called haves and the so-called have-nots, at least when it comes to the financial situation. From CNBC, stocks begin 2021 with a sell-off. Dow drops more than 300 points. That's right. Last Monday was the first trading day of the year, and all of the stock market indices opened with a catastrophic decline, which is no particular surprise when you have headlines such as this one from MarketWatch. Billionaire Carl Icahn says he's well hedged ahead of a potential, quote, painful correction, end quote, for the stock market. And he's joined by GMO's Jeremy Grantham, who warns the stock market is in a full-fledged epic bubble. They have more company. Famed investor Doubling Down says stock market is, quote, a real humdinger, end quote, of a bubble. That according to MarketWatch. And Bill Gross says stock market is bubblicious and that Robin Hood and momentum rule. That's on MarketWatch. So it's a huge bubble looking around for the nearest pin, and nobody seems to be noticing. Meanwhile, as a direct result of bubble-seeking pen, the headline at Bloomberg says Elon Musk surpasses Jeff Bezos to become world's richest person. So the battle is really on between the 8 bajillionaires in the world and all of the rest of us. From NPR, 4 dead, police injured, dozens arrested after siege at the U.S. Capitol. This from yesterday, January 7th, based on the interesting actions and the response to those actions by the security surveillance state of the United States, which was to open the door and encourage civil unrest so that they could then crack down on the people who have taken the country a little too far to the right, as if that hadn't been in play for, my entire life, at least, that shift to the right. But now apparently it's gone a little too far. For today, though, the Dow rises more than 200 points to a record. NASDAQ tops 13,000 for the first time. Actually, that's yesterday. Today isn't looking quite so good. Pelosi urges Pence to use 25th Amendment to remove Trump. That, according to a headline in the Washington Post, but then a response in Bloomberg today, Democrats' drive to oust Trump hits reality check in Congress. In other words, it's not going to be as easy as we thought it was going to be to get rid of that man. So we're going to have to buckle down and do some work. And there's not a lot of time left for buckling down or doing work. Not that Congress has been known for doing any of that over the last few years. From the Wall Street Journal, also today, U.S. stocks waiver after jobs report. Again, I return to the beginning of this short video. Jobs report says a whole bunch of people don't have jobs. A whole bunch of people aren't getting vaccines because the people who are in charge of distributing the vaccine aren't willing to hire people and pay them a decent wage to deliver vaccines. Do you see a circularity going on with the reasoning here? And so it goes. Just a couple of more headlines to close out the week. First, the Fed could start pulling back on support next year. What that means for stocks, this according to Barron's, and what it means is not good to withdraw the lubricant for the system from the system. So less money means less money going into equities, including the stocks. And from the Washington Post, Biden assembling new stimulus plan with checks, unemployment aid. Just as expected, Biden is going to make it a priority to get some more money pumping into the economy, especially in light of the fact that the Federal Reserve looks like they're going to be drying up some of the easy money that has been flowing so far, at least for the barons on Wall Street. And finally, as the week closes, all of the major indexes are up modestly for the week, continuing the trend from the last 2 weeks of last year. So there you have it. Nothing particularly exciting, and I suppose that's good. And nothing particularly exciting means both ways. So I can only imagine what they might have to say about this, but let's go in for the close-up. That's what I thought.